Welcome to the Social Hotelier. This is for you who are interested in what's happening in the hospitality industry, what is the latest things going on in the travel trade. Even you are just a casual traveler who travel on holidays. Here in this channel, you will get some tips and tricks how to manage to get the best deal for your hotel bookings and what kind of hotels you may want to consider. We are traveling around the world. But today's topic is a topic for you if you are interested in about hotel brands and how hotel developers are choosing their brand. So you want a hotel brand for your development. How to choose the right fit is really what we're going to talk about today. And For those who don't know me, my name is Sam Erik Ruttman, and I worked my entire working career in hotels. I started in the operation, worked from a receptionist up to general manager in various continents in US, Asia, and Middle East, but also worked in development, which means I was part of the team who was negotiating contracts and developing projects for hotel brands and hotel owners. So that's my background. So I'm talking from I'm sharing and my observations and what I'm sharing in this show is about my experience for you. And I think that one of the key things that people are asking, well, why should I choose a hotel brand? Because best of the best hotels in the world, in many ways, are a family-owned individual hotel, and the hotel itself is a brand. Well, why is that? Well, because the brand itself is the family, and their passion is about making sure that the experience that the guest gets while they're staying is like they're coming to the best friend's home. And the most successful hotels has became brands on their own, and they've grown to something to multi-hotels, and that's how many of the family-owned hotel has become the successful hotel brands. You take some of the historical hotels like Cesare Ritz, the Ritz hotels. Well, he was a developer, and the famous Waldorf Astoria was a one-man's development originally, and now it's part of the Hilton's luxury collection brand. Hyatt was initially a motel. Hilton was initially one motel, and they grew to a brand because there was a vision and a commitment to excellence from those owners of these hotels. But today's world has changed, and since the 50s, particularly 50s, when there was huge growth of hotels in the US, likes like Hilton, they start to grow, and when the developers want to build their own hotels, they also engaged and sold these brands to them for a possibility that they will manage the hotel on their behalf. And that's how this idea of hotel management came about. But the thing is that with hotel brands, what is special about the hotel brand, and why is it so successful? Well, the reason is that the hotels can bring their expertise and their sales and marketing channels to sell the hotel rooms on behalf of the owner and run the hotel successfully according to the quality standards for the owner, and then they are basically benefiting from having a flag on the roof. And this is what makes the hotel brands successful in what they're doing. And I'm going to share with you what kind of hotel brand, what is the structure when you have a hotel brand. So we're going to talk about the next step. What is the hotel management agreements? And I'm going to pop up the slide here, and we will see how this gets going. So here we have the hotel management agreement ideas. So these are some slides that you will see. I will share with you what are the principles of hotel management agreements. Here you see a beautiful hotel, a resort somewhere in an exotic country, or could be, and there is, when you arrive, you will have uh, received been received by someone who's working there, and they are representing a brand. And so we're going to go through the principles of how the owner, what he had to find out in order to get this, what are the conditions he had in order to have a hotel brand run the hotel for him. So first of all, the hotel brands are, or management agreements. These are roughly the percentages worldwide that are managed under a brand. Majority here is management agreements. 75% of hotels in US are with management agreements, and that's why the topic today relates to this kind of agreements. Also in Asia, majority of the hotels are also under these management agreements. In Middle East, it's over 80%. And in Europe, it's mainly in the key cities, again, key financial cities where you see where the management agreements and hotel brands exist in the hotels. And in Scandinavia and the Nordic countries, 25% are under agreements, but the majority are under franchise agreement, which is a different type of agreement structure. And so what is the point of a management agreement, and how does it really work? Well, when you have a development and you need to think, well, who I'm going to bring to manage this for me, you have basically, if you take the largest hotel companies in the world, which are basically four companies that are the largest. You have the Intercontinental, you have the Hilton, you have the Hyatt, you have Accor, and you have Marriott. Together, they have over 100 different brands, because they have sliced their branding according to different structure of target customers. So they try to attract, and according to customer profiles. So that's how they're setting up their branding. So they are having a lot of resources to and data about the customer, so they can design a hotel according to the requirement of this requirement, and that's what makes them successful. So there are three types of contracts when you negotiate with a hotel brand. Basically, they are a technical service consultants agreement, and there's a licensing agreement, and a hotel management agreement. And the most important part of the technical service agreement is to when the hotel is completed, it complies with the brand standards and is a functional and operational efficient hotel. And that's what is the difference. That's what makes that's what you're paying for when you engage yourself with a hotel brand, because they are with you and they are providing the technical service standards manuals. So everything relating to designing of the hotel brand is as a one of the many consultants who are designing the hotel for the developer, and they are involved in various review meetings and until the hotel is ready, and they conduct site inspections. In fact, they're going to such detail that the requirement is to build a mock-up room, which are reviewed and inspected by the technical services and the management of the company to see that how is the feel of the hotel room. And after that, hotel prototype rooms are being built. And then once the hotel is completed, then the technical services team join the contractor to hand over the hotel to the owner, who hands over the hotel then to the management team. So that's the process, and usually takes about 2 years, this process, before the hotel is ready, efficiently open. In some countries where the construction standards and efficiency is better, then this can be built in a year and a half. Normally, these contracts are the cost is usually related to a per key price, meaning per hotel room price, or a lump sum, and that's the condition. And so this is basically a consultants agreement now with between the technical services team of the hotel company that will manage the hotel and the hotel owner. And the next agreement we're going to touch is then the licensing agreement. So the license agreement gives the owner non-exclusive rights to use the hotel brand for the hotel. That means that the hotel that the company hotel management team will manage has that brand name. There are cases when the developer try to be very smart, and they want to use the brand for when they're opening a service apartment in another building, or they want to use the brand in one of their other outlets. That's cause for quite a bit of disputes between developers and or the development company that owns the hotel, and that he wants to use the brand. Since he has he's paying a licensing fee, he think he can now use it for other purposes. But this is really that's a restriction, and it's a fee that is based that they're paying fee-based that they're paying for the right to use the brand for the hotel only. And now the next is basically the hotel management agreement, and that's the management team is responsible to prepare an annual business plan for the hotel owner or the investor who owns the hotel, and this is for the owner's approval. And so they are looking the management company with the team are looking at the business, the competitive, so they are collecting a lot of data, and they're also forecasting of how they expect that their brand and hotel will be successful for the coming year. And because the strength is sales and marketing channels, distribution channels, where they can tap into hotel to get the bookings in under the brand for the hotel. Now, there's some brands and some companies that have a different approach to this. Now, a great brand will have their own resources to get the bookings into the hotel. The others, which I think a little bit of a interesting approach, is that they sign contracts with various tour operators who will then and sell allotments. So they will book the hotel. So these are pre-sold 15 rooms per day that has been pre-sold to this holiday travel group, and they're booking the hotel. But of course, that has an impact on what kind of price. And I think the developer has to be very careful when you are working with these companies. They should explain exactly how they're going to sell the hotel rooms that they have a contract with. And this is a very old way of working typically in resort environment, where majority of the hotel rooms was allocated to oversee tour operators that sold again their packages for the customers. But that's very old-fashioned way of working, because now we have a different world, and I expected that the hotel brand should do much better than that. And also, if you look at a lazy hotel operator will also put all the majority of the rooms into various online travel agents and third parties. And when you do that, you're paying 15 to up to 20% commission. And so that for every room booked. And so a great operator and great brand should be able to have their own channels to bring business to the hotel. So, because at the end of the day, it affects the profitability of the hotel. So going down the list, they're operating the hotel according to the budget and also the terms of the management agreement. Basically, the hotel brand manages the hotel on behalf of the owner. So they are basically that's really the function. So the role of the owner is to yes, supervise that their assets are taken care of very well. And in the driving seat is the hotel management company with their brand and their management under their supervision of the hotel brand to manage the hotel on behalf of the owner successfully. So here's just a list of things that they need to consider. And the last point is adhering to the service and product standards required by the hotel brand. This is a little bit of a difference also now when you have a management agreement. This is a very sticky point because the hotel brand is the most valuable asset for a hotel management company. So they want to make sure that the hotel complies with those standards, because they are complying. Every single hotel under their brand should comply to the same standards. You will see in certain different kind of agreements, whether it's a franchise agreement where the owner takes liberties because there isn't a representative in the hotel managing the hotel, that they say, well, no, I think this is too expensive, we're not going to do this. No, we will leave this out also. And then it makes quite a difference between if you have a same branded hotel in different parts, different countries, that the standards will not be the same. And that's why I'm a great proponent on the hotel management agreement, because there is also a control that the standards are going to be set, and they are according to how the hotel management company and the brand are continuously reviewing and improving on the brand according to what the customer wants. They will be inserted into the hotel, and I think that's a big selling point for the management agreement to be a big case for a hotel management agreement. Now, the terms of the contracts are usually 15 to 20 years, and international brands that are very well established and have a strong reputation will favor longer contracts. Now, when I talk about international brand operators that are very strong and has a long reputation, they also are selecting very carefully where they're going to bring their brand for what kind of hotel developments. And because there's a reason for the owner when they sign, why is there a benefit to have a international brand operator there? And usually luxury chains, there are the latest list of top 10 luxury chains are secure. Normally they have contracts, renewable contracts, which goes beyond 20 years, 30 years, 40 years, because they know that when they bring a luxury brand to a project, the investment required is very high, and it need to be given a longer economic life of success for the asset, and that's that's a selling point for those top brands. So the question is, what are the top brands? Well, you have Langham, you have Four Seasons, you have Peninsula, you have Mandarin Oriental, you have Park Hyatt, just to name a few great hotel brands and hotel companies that are in operating hotels. But of course, there's other side which has to be a protection for the owner, that the owner will need to look for acceptable termination provisions, which are included in the contract in case things are not going according to plans. And particularly if the management company does not perform up to owner standards, owner can exercise some termination rights. But that's more of a detail of how the agreement are structured and negotiated between the hotel brand and the hotel owner. Also, a popular question is what kind of management fees? Well, these are always negotiated. These are the standard of fees are that the management company gets a certain percentage of the gross revenue, and in some cases they maybe get the higher base fee, which includes the licensing fee and centralized services, which are the marketing fees. But those are all negotiable. In many cases, you're paying a separate license fee, you're paying a separate centralized marketing fee, and then you have separate base fee. But those are all negotiable, and that's part of if you have a good consultant to negotiate those agreements, that's where their job to get the best deal for the hotel developer. And the brand operators encourages maximize the revenue rather than the net income when you're looking for their fees. But it depends on the location. If you have a location which is very successful and having very high average room rates, then of course they don't mind getting most of their fees from the incentive fees, meaning which are they getting from the gross operating profit. If the location is not very strong, but they still are operating in that brand with their brand into that location, then they will negotiate higher fees from the top line because they will, after all, they're in business to their business is getting fees from management fees. So, which I mentioned, these are the part of the incentive fee structure that they will take in consideration. So far we covered the basics of the hotel management agreement, and we covered sort of the kind of agreements we have. We have the technical service agreements, we have the incentive licensing agreement, we have then the management agreement, the length of the contract, what are the principles of the fee structures, and here's the last part, which is the incentive fee, which is paid according to a specific benchmark related to the gross operating profit. And it's normally a percentage, or it can be also depending, the higher the gross operating profit, the higher percentage of incentive fees does the operator get. And the other fees, as I mentioned, was sales and marketing centralized services. These are percentages of room revenue that is being charged. So they can, and these fees are basically used. There's not really a profit for the hotel management company because these are used for the web development and also their online how they're promoting the hotel as part of their portfolio of different hotels. And so they are basically it's a lump sum. Normally, these lump sums are every hotel that are part of the who has a management agreement with the hotel company will contribute to this pot of money, and the money is used for those centralized services. And all kinds of and because there is a lot of online and mobile driven promotional tools, and the fees those costs are paid from the fee that has now been called the centralized services. And the whole idea is to develop and build guest loyalty and enhance the reputation of the brand and the hotel that they are representing. Well, one thing which I think is relevant to consider is the operator guarantee, because usually the first question the developer is asking, well, what can you guarantee? Well, normally the operator cannot guarantee anything. I mean, they are making a solid business plan for the hotel owner, but there are times when they're in order to get the hotel deal, they may say, well, we need to have a gross operating profit guarantee, and if they're not able to get that profit level that they promised in their business plan, there may have to be a subordination of the incentive fees, so it's not payable until they're reaching a level of profit which they are promised. Another thing which are commonly asked by developers, they like to get some key money up front from the hotel operator to land a contract. And the contracting, yes, there's key money if you are looking at some key cities like Geneva, Paris, and Milan. Those are one of the part of the top 40 cities where every hotel brand like to have their hotel. And those are the AAA plus locations. So, but in other locations, they would never go along. And also, another thing is that the equity participation or loan by the operators are not they don't have an option. So they are basically a management company. So they're not investing into a hotel brand or project. They come in with the know-how of how to run the hotel on behalf of the owner. So what are the things which are the difference between the hotel owner and the rights and restrictions of the operator owner right? The owner approves the annual budget and the capital expenditures of the hotel. And they also have a right to choose the key executives, the general manager, which are appointed by the management company, but are approved by the owner, because on day-to-day basis, the general manager will deal with the owner. Usually the director of finance and also the director of sales and marketing are approved in advance by the owner. But also there are also restrictions on the contracting. For instance, lease agreements and concessions in the hotel are, or in many cases, need to be approved by the owner. So it cannot be, and in fact, some of these lease agreements are going directly to the owner rather than to the hotel management company. So they are not enjoying the fees from a rental agreement of a shop or a car rental, for instance. And capital expenditures, basically, these are it's a percentage that is being reserved every year. So in order to replacement of equipment and non-structural improvements of the hotel, to keep the hotel refreshed and in a mint condition year after year. A hotel that runs higher occupancy, there's a wear and tear, and equipment need to be renewed, and this is paid from this part of a budget. So that's quite a bit of information for you at the moment, but in summary, the key of what are the advantages of having a hotel management company and compared to running it on your own is that you get quality management and recognition, as a brand, and the worldwide sales and marketing channels, and more importantly, you're retaining the benefits, the cash flow, depreciation, deductions, tax benefits, etc., that belongs to you as an owner, and the brand value. In case of one day that you have a top brand for your hotel and you are planning to exit and sell the hotel, it is seen that the hotel brand will create value for that building up to 20%. So, which is a very compelling selling point when you have a good brand there. But also, I mean, there are some disadvantages need to be considered because this hotel, when there's a higher downside risk, and if you are terminating an agreement prematurely, there can be a very expensive exercise here, and so that's why it's important in the beginning to find the right fit and that you are comfortable with the brand and hotel management company that you are working with, that you have a long marriage between the partnerships. It's considered to be a partnership, not a financial partnership per se, but the partnership in terms of operating the hotel. And so that's just a short list here on what are the pros and cons, and because the hotel operator doesn't really invest into all the expenses are paid by the hotel owner or the hotel developer that owns the hotel. That's basically a major difference between many other contracts, and basically they are bringing their expertise for this, for managing the hotel for you, so you can earn the money. So really the summary of is it's a suitable for high risk and high return oriented investors. Then on the good times you're making much more money than with a rental agreement, and the downside is that when things are soft, you're not going to make as much money. But you also have to look at the term you're going to operate, maybe 20 years. That hospitality is cyclical, so there are good times and bad times. But when you have a good hotel brand, they are able to also manage the hotel very well for you and get the profit that you need during the slow periods. And also, most hotel investors, there are a few exceptions that doesn't know the hotel business per se, And the key factor of the success of any hotel management agreement is that you have a asset manager on board. Now, his role is very important because he's the one who is working with the hotel owners, hotel directly to monitor and be the sparring partner and to find pockets of growth and revenue opportunity in the hotel. So I think this is one of the key factors that you are, the reason why you are, when you have a hotel, you cannot forget that you have a hotel. You need to remember that you have to be part of that hotel life and participate, and that's how you can create success for a hotel as an owner of the hotel. So that's basically a summary of this. Now, if you want to have the slide deck of this, I'll be very happy to provide this for you. And just send me a message.